Hello, I'm Mario Toneguzzi, Managing Editor of Canada's Entrepreneur. My guest today is Dennis Schooley, founder of Schooley Mitchell. Thanks, Dennis, for joining us today.
Well, thanks for having me, Mario. It's a great thing to be here.
Okay, we're going to talk a little bit about some of the current economic conditions out there in Canada. Just as a background note, Dennis and I are speaking right now on Friday, August 29th. I'm not sure when this is going to air, so I reference that because today Statistics Canada came out with its quarterly GDP report, indicating that the economy contracted
Yeah.
in the second quarter of this year. Um, Give me a sense of where you see the economy in Canada right now, Dennis.
Well, I think the biggest thing is it's topsy-turvy. I mean, people just don't know how to make long-term plans. I mean, everything that keeps happening is causing alarm bells, whether it's recession, whether it's inflation, or when we went through the pandemic, or tariffs, interest rate fluctuations, unemployment rates, all those things are changing so rapidly and quickly, Mario. I think it's eroding the trust of business people. And as a result, you see that contraction that you just mentioned. And I think that's what has happened. I think it's going to continue to happen in those ways.
Okay, what does this mean for businesses out there?
Well, I mean, the reality is people react as human beings when these things happen, and I mean, there's things out there, group bias or crowd bias where people hear these bad things and then they tend to agree with them because that's what everybody else is saying, or confirmation bias, when they have a suspicion about something that's going to be negative, then they hear something that backs that up, and all of a sudden their conviction becomes stronger. The result is they don't do things the way they should in terms of operating their business. Alarm bells go off. And so people tend to do things they maybe shouldn't do, like laying off staff, or, they're really worried about pressure on their sales numbers, or, their margin control, things like, those are the things that businesses are good at and they should manage. They just have to keep a level head about it and understand that if the alarm bells aren't causing you to sort of make incorrect decisions, then if you're sort of the contra to the norm, you're probably going to be better off. You're going to succeed because everybody else is following that same crowd path, right?
Yeah, it's funny because I'm recalling a campaign in Calgary years ago. One of these media companies did these short snippets of videos with people and about
Yeah.
surviving through a recession and
Yeah.
tough economic times. And one thing always stayed in my mind from those interviews was one with an oil patch guy, a veteran oil patch guy, and he said, sometimes recessions aren't bad because it forces companies to look at how they're doing things and why they're doing things.
Yeah.
Can you talk about that?
Yeah, and that's really kind of the message that I would like to give. I mean, it's a little self-serving because our business does exactly what you
Mhm.
just said, and that is, the way to mitigate some of these effects rather than the alarm bell reactions, which causes actually long-term harm to the company, is to control the costs below that gross margin line where things are generally, leaking out of the company. I call it death by a thousand cuts. And that's to take a look. Now, it's not easy to do because a lot of these things, they may seem simple. They're not the main expense of any given company, but they're very complicated. But if you put the resources in place one way or another to manage things like telecom and merchant services and courier costs and software costs and fuel, things like that, I think you can really mitigate the effects of any of these topsy-turvy things that are affecting the economy as a whole. And
Mhm.
I can go deeper into any one of those cost categories if you'd like, but they are complicated.
Tell me where, in this day and age where things like technology and AI can um, can help companies reduce costs.
Yeah, I'm not sure AI is really the solution for that. I mean, certainly AI's got tremendous powers to help, manage companies and make for efficiencies and eliminate redundancies in jobs and things like that. But to do what we do, which is to examine expenses, look for alternatives, arrange with the vendors to do that negotiation. AI really can't do that part. So I mean, it's a great tool. It's the way of the future for sure. But this one takes some manpower and some flexibility. So
Mm. Okay. Now, in these tough times, businesses often react pretty quickly and kind of knee-jerk reaction when they see
yeah.
things heading south. There's a lot of doubts, anxieties, fears, stress, etc. How do when you're talking to companies, how do you get them to kind of step back and not react too quickly without thought of what you're doing?
And that's really our message is to say, okay, let's just not overreact and make some decisions that are going to have long-term harm. Let's take a look at some of these individual expenses and see if we can find some money that will help mitigate that term where you've got to, bridge the gap sort of thing. So, I mean, just an example, if they've got telecom costs, which, almost every company does, there's a lot of complexity in there. There's a lot of price creep that takes place. There's a lot of errors and bills. There's a lot of options that change every single month almost or every single week out there in terms of what you can do, the pricing options, the vendor options, things like that. It's about putting some resources into something like that rather than worrying about laying off 10 people, which will long term harm your business. And there's so many other expenses down below that gross margin line that are very complicated, just like telecom is, that you can put some resources in, manage them properly, and recover some funds. And really, that's our message to companies so they don't overreact, like you said, knee jerk reactions.
Is that traditionally been the response of companies when facing tough times and bills having to be paid? Is well, let's ask people.
Well, I would say, yeah. I mean, whether it's people or some other kind of a facilities adjustment where it's actually going to cause harm in the long run. I mean, they see it as a nice big chunk of let's save some money this way right now. But if it's something that's going to cause a long-term effect, it's yes, I do see that all the time. That's sort of our main message to our clients is okay, maybe let's not do that. Let's find a way to manage these other expenses below the line because see, every dollar that you save in any of these ancillary expenses goes right to the bottom line. That's money to help keep that job, to continue to have your growth strategies rather than cutting them back, which is really the natural reaction is to do those things, and they're harmful.
Hmm. Why are companies or businesses maybe a little reluctant to take a deeper dive in how they operate?
I think sometimes they think there's not enough bang for the buck, below the line. But when you look at, all these expenses, and like I said, it's more like death by a thousand cuts. Not one band-aid's going to fix it all.
Yeah.
But if you look at all of those things and figure out how you can mitigate or optimize each of those expenses, sometimes that bang is a lot better than laying off those 10 people or cutting back your growth strategy, which is going to, in the long term, create your value for your business. So, yeah, you're right. And I suppose the reason is because not any one is a big bang for the buck, but all put together, they really can be.
Hmm. It takes some time and effort though to go through all that, doesn't it?
It really does. It's not easy for a company to do, and that's the decision they have to make. Do they
Yeah.
have the resources to apply to make sure that they are optimizing that expense, or should they bring in a third party consulting company like us? We don't charge any money to do our analysis, so there's no risk to bring someone in like Schooley Mitchell. Um, but the result can be much more because we've done 32,000 clients, so we've got a lot of clout and a lot of knowledge about where each of these expenses should be, how to recover errors in the bills, how to eliminate redundancies, and how to make sure the company has the proper prices. One way or another, they have to determine, do they have the resources to do that or the knowledge, or should they bring somebody in to do that? But that's still, either way, it's going to be more advantageous than, like I say, doing those macro type things that are going to affect the long term profitability of the company.
Hmm. This isn't a problem or an issue that's going to go away anytime soon, it appears.
Well, it never has in the history of business. So, you know, I know, I mean, we get a calm in the storm for a while, for
Yeah.
maybe 2, 3, 4 years, but then the next thing hits. And I mean, the way the political environment is, it's always topsy-turvy right now. Nobody knows what to expect next. And so that, for the same reason, means I need to mitigate and I need to be lean below my line so that I don't have to affect my above the line activities
Hmm. When should businesses start looking at this?
right now.
Yeah. Yeah.
I'm sorry, that's not a long conversation. Right now, I mean, every day that goes by, they're actually leaking more money down the drain. And that's really our message is let's stop that. Let's not pay these vendors more than they're entitled to or they should be paid. And so that's an immediate thing. The more you put it off, the more dollars just left.
Hmm. Are there any, from your experience, Dennis, any industries that, in businesses in certain industries that tend to, I don't know, have too much costs that shouldn't be there?
I don't know that it follows industry lines so much, Mario. It's more about how strong are the vendors in maintaining the margin they want, and how good are the companies at, or how much time do they have available to negotiate better terms and to stay on top of it, because that's really the difficult part is each month you've got to do the same thing over again in order to really keep it under control. But I don't think that's an industry thing. It's more of a company by company, no matter what industry they're in, what's really going on, which of these expenses are they incurring, which ones are really difficult to understand and manage, which vendors are getting more margin than they should be. That takes some analysis, and it takes every month to look at it again and benchmark it again.
Yeah, and I guess the bottom line, so to speak, is the fact that if you're not doing this, you may not be in business for very long, right?
Yeah, I suppose it can get to that degree, and people I don't think everyone looks at if my business is in threat, then I look at my sales, my revenue. I look at my direct costs of inputs and margin, and that's what I adjust to. And it makes sense. I mean, those are the most important things. Those are why those companies are in business. They're usually good at those things, but really very rarely do you look below that line. And if you don't manage that, you're right. That can be the final thing that puts the nail in the coffin.
Hmm. And I'm also curious, from your perspective, when you take on say, a business, how long does it take you to go through all that and come up with a plan? And
Well, that's
is time of the essence?
I mean, it depends how long. Time is of the essence in the sense the day you start is the day you start getting towards results.
Yeah.
So that in that regard, it is of the essence. But the time it takes to get through this is dependent on how big the company is. Small or medium companies, it's usually within 4 to 6 weeks kind of thing. We can get to a result and get things implemented. A larger company with lots of transactions, it's going to take longer because the analysis is longer. There may be more vendors involved. It may be just a longer negotiation process and an analysis process. So I can't give you a in the bow tied up box with that one. But the critical thing is get started now.
Mhm. And when you look at the different aspects of where companies spend their money, their costs, are
Yeah.
there any key ones that always, I don't know, raise red flags for you, like common ones?
Well, now that one does sort of go by industry. I mean, if you're talking about a manufacturer, I mean, it depends what they're manufacturing, of course, but you're more likely to have things like courier costs and less than truckload and fuel and compressed gases. But you're also going to have supplies and telecom and, depends how they get paid, maybe even some merchant services, where as, let's say a retail, it's going to be more merchant services and maybe some supplies focused. So it really depends on the industry, but there's every industry, every business has some of these costs that can be controlled. It's not easy to see how you can do that and all the things that go in to the pricing model that those vendors have because those are not transparent. Those are the things that special knowledge that we have comes to the table to help with that.
Okay, wonderful. Well, thanks so much, Dennis, for joining us today.
Oh, you're very welcome. I'm glad to be here and come back anytime you like.
Okay, thank you. That was Dennis Schooley, a founder of Schooley Mitchell. I'm Mario Toneguzzi, managing editor of Canada's Entrepreneur. Thanks for joining us today.